Welcome to today's edition of the Investor Dictionary, and today we're going to be looking at the definition of return on invested capital. Now, the return on invested capital is a calculation used to assess a company's efficiency at allocating the capital under its control to profitable investments. In other words, the return on invested capital gives a sense of how well the company is using its money to generate more returns. Because a company can receive capital from outside investors, but it's only the capital that it receives that it actually plows into income generating projects that will be giving returns. So in other words, if a company is making a return on capital, say of 50%, but it's only investing 50% of its capital that it receives into projects, then effectively it's making 100% return on the capital that is physically investing. And if it's making such good returns on the capital that it's physically investing, the obvious question from the shareholders would be, why are you only investing 50% and not 100% of the capital? So it's very important when looking at how the company's returns are compared to capital, the capital employed. It's also important to view how the company is making returns on the capital that it's actually physically using to plow into return generating products. And let's break this down just a little bit further. In invested capital, the value of in the denominator is the sum of the company's debt and equity. So in other words, the total invested capital will be the total amount of debt and equity, and then a way of calculating the invested capital would be to look at the book value of the company's equity to the book value of its debt. So in other words, and then subtract non-operating assets, including cash and cash equivalents, marketable securities, and discontinued operations. Or should I say the assets of discontinued operations. And always remember that the return on invested capital is always calculated as a percentage and is usually expressed as an annualized or trailing 12-month value. And it should be compared to the company's cost of capital to determine whether the company is creating value. So in other words, if the return on invested capital is high, but the overall return on total capital is low, that means that the company is investing relatively little of its employed capital into projects and therefore is not creating value at its maximum possible rate. So that is the basis of what return on invested capital is, and please stay tuned to this channel for more Investor Dictionary definitions that will be coming to you on a day-to-day, week-to-week basis. Thumbs up for this type of video content, thumbs down if you don't like this type of content, and last but by no means least, there's a big red subscribe button down there as well. Hit that subscribe button, that way you stay subscribed to my channel for all of the Investor Dictionary definitions that will be coming to you on a day-to-day, week-to-week basis. Stay safe out there, and I'll be seeing you soon. Cheers.